I'm Richard Surser from Tucson, Arizona. At Berkshire, what counts most are increases in our normalized per share earning power. And that was in your last letter. What is our normalized per share earning power as you estimate it?
Well, I would say that what you saw in the first quarter under these tax rates would probably be a reasonable guess. Obviously it depends on the economy in any given year. I would say that is a reasonable estimate, but we have firepower we haven't used, and we'll have more firepower as we go along. So we do expect that normalized earning power to increase over time. And if it doesn't, one way or another, we're failing you because we're retaining those earnings. So I don't see anything abnormal in our earnings, figured now at a 21% federal rate. But as I look at the $5.25 billion in the first quarter, seasonally, insurance is better in the first quarter, but seasonally, most of our businesses, the first quarter is not the strongest quarter for us. I don't see anything abnormal in it. And then I think you should expect, we expect substantial capital gains over time in addition to what comes from the operating businesses. So how much you figure in for that, I would say that the retained earnings beyond dividends of our $770 billion of equities, in other words, how much they are keeping from us, but that our share of the earnings, which can be used by them, whether it's Apple or American Express or Coca-Cola or Wells Fargo or whatever, our share is in many billions of dollars annually. And one way or another, we think that those dollars will benefit us as much as if they'd been paid out. Now, in certain cases they won't, but in certain cases they'll excel the amount in terms of market value created. So there's many billions of dollars we are not showing in our earnings that is being retained by our investees. And one way or another, I think we'll get value received out of those. So you can take 20 or 21 billion under present tax rates, present economic conditions, and then we should get something from that, and we should get more when we get 100 billion of cash invested, and we should get more as we retain earnings. So we hope it adds up to a bigger number as we go along. Charlie?